This is Matthew Cratter from Bitcoin University. Today I want to talk about why Bitcoin is less risky than stocks. This was a question from Bitcoin Buccaneer Bridger. First of all, it's important to notice that price volatility is not risk. A lot of finance professors believe that price volatility is risk, and then they use it in their models. But I think this is complete nonsense. A stock that wiggles around is not a risk. A real risk is a company selling a product that is about to become obsolete. That's how you measure risk when it comes to investing. If you seek to avoid price volatility when investing, then inevitably you're going to miss out on amazing investments like Apple and Amazon and Nvidia that were especially volatile when they were smaller market cap stocks. There's really no free lunch when it comes to investing. You can have low volatility and low returns, or you can have high volatility and possibly high returns. What you cannot have is low volatility and high returns. That's almost always a scam, as we saw with the Bernie Madoff scandal. I think this is one thing that Warren Buffett and I can agree on, that price volatility is not risk. Instead, here's how I measure risk. I measure risk, and I believe Buffett does as well, the risk of permanent impairment, a stock going to zero and never coming back. So for example, when a company files for bankruptcy, the stock price usually goes to zero and the bondholders may become the new equity holders. So that's the real risk of permanent impairment when it comes to a stock. The risk of permanent impairment when it comes to Bitcoin is close to zero at this point. Those days are long gone when any government or other entity could kill it or put a stop to it. So Bitcoin is not fragile. In fact, it's much more than even robust. It's anti-fragile, as we've spoken about in the past, benefiting from chaos and attacks and getting stronger as the result of them. If you're enjoying this video so far, I just ask you to please subscribe. It really does help the channel. Hit the like button, leave a comment, question, suggestion for a future topic, as well as share this video with a friend. If you want to learn more about why Bitcoin is anti-fragile and how that works, I will link to this video in the description notes below. So let's rewind, talk about what a stock is. A stock is obviously a form of ownership in a company. That's why it's called equity, which means ownership. And that's why stocks as an investment class are sometimes referred to as equities. When you buy one share of Apple stock, for example, you become a partial owner of the company, entitled to dividends and other rights like that. Stocks live inside of your brokerage account and perhaps on pieces of paper, in some cases still. In the case of paper stock certificates, though almost everything has moved on to digital. By contrast, Bitcoin properly held, where you hold your own keys, is what's called a bearer asset. A bearer asset is where you hold something yourself and no bank account or brokerage account is required. You can move it yourself and there's no counterparty risk when something is a bearer asset. It's like holding a chunk of gold in your hand. No one can freeze or turn off your investment. As we said, physical gold is a bearer asset too, but it's unfortunately not designed for the modern digital world. You cannot send it across communication channels as efficiently and cheaply as you can Bitcoin. Now, because stocks are not a bearer asset, they open you up to risks like counterparty risks, account freezing, confiscation by your broker or by your government, etc. And these are things that do happen in extreme scenarios. What are some other risks that come with investing in stocks? There are governance risks. The executives and the board may be corrupt. There are accounting risks. The numbers may be fudged, as they were with Enron and WorldCom and so many other companies since then. Operational risks. The company may do stupid things like virtue signal instead of seeking out new oil reserves, as many oil companies have done over the last 10 years. Technology risks. You rent DVDs and the world is moving to streaming. This is what happened to Blockbuster. Competitive risks. You make BlackBerry phones and then the iPhone comes out. That's also a form of technology risk, I suppose. Then there are political risks, of course. The government can seize the company's assets. This has happened in many countries over the past couple decades, in the past century. In Venezuela in particular is an extremely prominent example. There are other types of risk as well. There's financial risk. The company takes on too much debt and then defaults on its debt during an economic downturn, thereby wiping out shareholders. There's supply chain risk. There's reputational risk. Someone, for example, puts poison in your product, puts poison in your medicine, and people die. Your brand may not recover from this, and your company may not recover from this. There's legal risk. A company loses a patent infringement case, for example, for its main product, and its revenues are cut to zero as a result. There's weather risk, where a hurricane destroys your inventory and insurance doesn't fully cover it. In fact, if you want to learn about all the different risks, you can take a look at the risk factor section of 10Ks. This is the one from Microsoft, and we can scroll down here and see risk upon risk upon risk upon risk. By contrast, Bitcoin is different. To begin with, Bitcoin is a highly liquid market that trades 24/7 globally, so it's very easy to get in, very easy to get out. By contrast, the stock market and banks as well are always closed on the weekends, they're always closed at night, etc. After a big disaster like September 2001, the stock market closed for 4 days. In the 1930s, stock brokerage accounts and U.S. banks were closed for weeks. The best companies in the world last maybe 100 years at most. I guess General Electric maybe lasted 120 years. By contrast, Bitcoin is built to last 10,000 years. You can hold it, you can pass it on to your children who can hold it, and they can pass it on to their children. You don't need to jump from one horse to another like you do with stocks and keep paying capital gains taxes each time. And with Bitcoin, you can also easily move it from one jurisdiction to another. When you hold your own keys, your Bitcoin's not trapped inside of a brokerage account. So Bitcoin really is a one-of-a-kind asset. It's not controlled by anyone. It can't be stopped. As we discussed, if you try to attack it, it only gets stronger. From the China Bitcoin mining ban to high transaction fees, to chain surveillance, to the banning of custodial Lightning wallets like Wallet of Satoshi, every attack like this only makes the Bitcoin ecosystem stronger and more robust. By contrast, the fiat financial system, of which stocks are a part, is actually quite fragile and has required greater and greater interventions over the past 15 years in the form of central bank interventions just to hold things together, including quantitative easing and bank bailouts. 500 years from now, the only things that I'm confident will still be around are cockroaches and the Bitcoin network, both of which can survive a nuclear war. If you want to take a look too at investment returns, this is a nice calculator, which I'll link to in the description notes below. Let's say we invested $100 in Bitcoin every month for the past 5 years. How would that have compared to investing $100 per month in the S&P 500 every month for the past 5 years? Well, in both cases, you would have allocated $6,000. Your S&P 500 shares would now be worth only 39% more, whereas your Bitcoin shares would be worth, your Bitcoin would be worth over $25,000 for a return of 317%. You can also use this calculator to take a look how it compares to gold, for example, which is even more brutal. Where gold, you only made 23%, and Bitcoin, you still made 323%. If you enjoyed this video, be sure to hit the subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.